Good morning, expert investors. Merry Christmas, Happy New Year. I hope you're enjoying the holidays. Very interesting developments from the CRA, Canada Revenue Agency. This article is the best I've found so far that does a summary, and I wanted to review this with you. So, the Canadian government puts real estate investors in its crosshairs. They're coming for you, coming for me too. But let's read in. Don't let the headlines fool you. This headline is supposed to get you to read the article. It's not supposed to give you real news. So, Canada quietly put real estate investors on notice. I'm not going to read this to you because I know you can read, but I want to summarize a few points. A big exception is the Minister of Housing's mandate letter. And now, we all know a mandate doesn't mean much. It's not a law. It's not a bylaw. It's not anything, but something they want you to do. It's up to you or up to the Minister of Housing to cooperate or not. Okay, which puts real estate investors in its crosshairs. The minister has been ordered to cut profits, deter speculation, and limit leverage. What does that mean? Cut profits. Interesting one. Very not black and white. Very gray. Deter speculation. So I'm expecting this to be about foreign investments or foreign investors and the flipping and assignments, and limiting leverage is probably we're probably going to see some changes to how investors get qualified for mortgages. Okay, so Canadian real estate investors to be hit with taxes, lots of them. So you can see these headlines are all fear-driven, but usually these things are minor changes, but they have a macro effect on people's confidence in the marketplace. Okay, excessive rent surplus. The Income Tax Act will be amended to require landlords to disclose rent pre and post renovation. If a minimal renovation was executed and the rent surges, you might be hit with a tax to reduce profit. If executed, landlords might consider those renovictions. So they're trying to sort of squash the market advantage that landlords have, where if a tenant vacates a unit through their own will and choice, and if they were paying $1,000 a month before and market rents are now $2,000, that's a big rent surge, and I guess they're going after those huge rent increases, and they want you to report pre and post, which doesn't make any sense, but who knows how they're going to implement this. Okay. Anti-flipping tax on residential property. And I'm not being casual about this on purpose. I mean, if you think about it, trying to implement this and enforce it on every single landlord, I don't know how that's possible, but who knows? Stranger things have happened, as we all know. Planning on flipping a property in less than 12 months, you might have to pay an anti-flipping tax. Flippers might be a small segment, but they reduce the liquidity and replace it with higher priced unit. This marginal buyer has disproportionately large impact on home prices, similar to money laundering. So, as a flipper, you just got compared to a money launderer, which is insane. Now, does flipping and flippers have an effect on the market? Absolutely. When inventory is historically low and a flipper is coming in and scraping as many lower priced units as possible and then improving them and putting back on the market at higher prices, yes, it could have an effect. But that's the way a free market works. If you get a deal, you should be able to make a profit. I guess their perspective is that this is people's housing and they don't want it to affect it, and prices are so crazy. I don't know. I'm not saying I agree. I'm just trying to get in their heads somehow. Reviewing tax incentives for real estate investment trusts. Now, I'm not an investor in a REIT, but they take advantage. Think about it. If I have a unit that was making $1,500 and the tenant moves out and now the market rents $2,000, okay, I make an extra $500 a month. These REITs are doing that on an enormous scale. They control hundreds and usually thousands of units. So they would be the big fish, the whales that the government wants to come after. You and I, we're small landlords. So is it going to affect us? It might affect people up here. Fear is a powerful tool, and the fear of repercussions, the fear of something happening to you if you don't follow the mandate or the rule is a lot of times enough to deter people from maximizing their profits in real estate, believe it or not. Canada will attempt to limit the advantage of real estate over productive investments. This is a very interesting part. I'm not going to read this to you, but I encourage you to read this and do some research yourself, okay? Investors might soon need more of a down payment, limiting leverage. This is a move that other countries have recently adopted, including New Zealand. So just to, it takes the opportunity to invest in real estate, puts it in stronger hands. Like, for example, if you have a bunch of properties and you're moving around equity and you have capital, going from 20% down to 25% down really isn't that big of a deal. Actually creates a more stable investment. It will create more opportunity for you, and it'll take the weak hands out of the game or make it more difficult for them to get into the game. Okay, it lowers the amount of people who can play, which can be a good thing, cannot be a good thing, hard to say. When there's in a market like ours where there, you got, what do we have, 10, 11, 12 million people in the greater Toronto area, in the Golden Horseshoe, competing for housing on a small level where we don't have enough supply to meet their demand, reducing the amount of investors who are trying to take advantage of this quality market might be a good thing for you if you're already on the inside. If you're on the outside trying to get in, your barrier of entry just went from here to here. It's much, much harder, right? So it depends on where you are. This could help, right? But back to this, I just want to mention that, what they're saying is that productive investments, that create products or provide a service for someone have decreased in investment, while investment in real estate that doesn't necessarily provide a service for someone or create a product, even though we're providing housing, has eclipsed. Real estate has eclipsed productive investment, and that's not a good thing from their perspective. Okay? A temporary ban on foreign buyers. I mean, people talk about this like it's going to have a difference. Personally, I'm not a betting man, but if I were to bet, that this has zero impact on our marketplace. Curbing excessive profit for investment properties. The ambiguously worded, I'm going to read this on purpose. The ambiguously worded directive doesn't elaborate. It only says they'll do so while protecting small independent landlords, though. Most likely this means they'll be looking into institutional landlords. No plan usually means they do very little. So from the government's perspective, they come out with this stuff and they make a lot of noise and they pump fear into it, and it curbs the market. That's really what they're trying to do. And what they actually enforce or how these rules actually affect the market remains to be seen. But we've seen these small changes come up in the past, and have they really had any difference on our market? Now it changes the rules. We have to play a little bit differently. We stick handle in a different way to get to our goal. Instead of going left, we might go right. Instead of going right, we might go over the obstacle. So it changes the game a little bit, but the end goal, the fact, does it make real estate a bad investment or a good investment? Hard to say that changes much, okay? So I'm going to leave this for you to read. It's very important that you stay on top of this stuff. This is what informed investors do. This is what sophistication in your investment is, at least from my perspective. A sophisticated investor is armed with knowledge, and that knowledge gets that investor ahead of any trends. And these are trends. This is a trend. This is the government clamping down, trying to get control of the market. I mean, if they wanted to get control of the market, they should just let the market be a free market, right? Why would the government want to control the market? That's not how government's supposed to work. But welcome to Canada. So this is a trend. It's coming. How can you position yourself ahead of this trend to continue to profit? Because real estate is still a fantastic investment, still provides good cash flow. And the investors that are already in here, we want to continue to manipulate our investments and create profit, create cash flow, create that future potential, right? It's still a hard asset. It still creates income every month. And there's very, very few types of investments that can do that, okay? And yes, you can go into business, but in reality, this is a business for us investors who are doing this on a regular basis. So get ahead of this trend. Stay in touch with our YouTube here. Stay in touch with our newsletter. We're going to be keeping you up on this, and I want you to be ahead, as far ahead of this trend as possible. Talk soon, everyone, and have a happy 22.